Hi, I'm Jubak, and welcome to this week's YouTube video. Today's topic is jobs, the recession barrier erodes. If after you've watched this, you like it, please give it a thumbs up. I'll like it. You can also subscribe to my YouTube channel. That way you get notification of all the videos we're doing. We're doing about 3 a week, not always on the same schedule. If you want more, you can go to my free site, which is jubakpicks.com, 3 portfolios, and probably like 2 to 3 posts a day. It's free, as they say. And if you want more, you can subscribe to my Jubak AM site that's got 6 portfolios. We do some options and ETFs and hedging. Why title this Jobs, the Recession Barrier Erodes? The consensus among sort of professional economists that I've seen is that we can't really call this a recession until the jobs market gets weak. We're going to get new job data on Friday, August 5th, and will be for July. And basically the argument is that as long as the job market stays relatively strong, we can't say this is a recession because the economy is obviously not tanking for most people. Well, the problem I have with all of this is you've got a lot of people with gig jobs. You've got a lot of people with jobs that don't pay very much. You've got a lot of people with jobs who don't pay anything at all if you have to take time off to recover from COVID. All those things mean that you're seeing jobs fall behind inflation, which at some point leads to people spending less money. We're seeing signs of trouble in, for example, rising credit card balances. All those things suggest people are really stretched. And okay, so maybe it's not a recession yet, but it certainly looks like one's coming. The other problem I have is that jobs data is sort of backward looking. So we'll get jobs data for July on August 5th. And that's from a survey that was taken in the middle of July. So we're already almost a month behind. And what we're seeing right now is, if you look at more ephemeral, sort of anecdotal trends, we're seeing a lot of job cuts. Walmart, Warner Brothers Discovery, Tesla, Netflix, JP Morgan Chase, Peloton, Robinhood, PayPal, Compass, Redfin, doing job cuts in the last few months. Some of this is related to stock price, some of it's not. Let's take a look at some charts. This is Warner Brothers Discovery, which just announced that it's cutting 70% of its development business. And you can see why companies looking at their stock market fortunes and maybe the economy going forward might be doing job cuts. This is a very aggressive real estate company, recently public, but you notice, shoom. Peloton Interactive, maybe even Shump Plus. And Peloton basically not only is laying off people, but it said, hey, we were going to make our own equipment, but hey, now we're going to contract it out. And last, we've got Tesla. Tesla has said basically it's going to cut 10% of its salaried workforce. It's trying to figure out some way to keep margins up when things are getting more expensive. All those, I think, are reasons why you're seeing companies do this. And it's not so much that the companies are cutting workers in reaction to stock prices. It's that stock prices are signaling, those declines are signaling the conditions that are leading to job cuts, an effort to get costs under control, to turn things around. So you're seeing all those things. So that's the anecdotal stuff. There's also a company called Challenger Gray and Christmas, which tracks job cuts. In June 2022, job cuts were up almost 59% from the level of job cuts in June 2021. Okay, it makes sense. June 2021 was recovery from the pandemic. Now we're in a totally different stage. But the thing that's interesting to me is that job cuts in June were up 57% from job cuts in May. So you're seeing a huge lump. These I don't think really have yet started to show up in the official backward-looking data. I think the jobs market is less robust than it looks right now. The stock market right now is saying we're getting a weak enough economy to get the Fed to back off on rates, but it won't be so weak as to cause a recession. In other words, the perfect soft landing. What I'm seeing anecdotally, hasn't yet shown up in the numbers, suggests that, well, a soft landing is really not in the cards, and we're starting to see the erosion in the jobs market that is going to lead us to an absolute recession. If you like this video, please like it, give us a thumbs up, subscribe to my YouTube channel, that way you get notification of when we're doing the next video. If you want more of my stuff, you can go to my jubakpicks free site. It's got 3 portfolios. For even more, you can go to my Jubak AM paid site. That's got 6 portfolios, including some hedging and options and ETFs. Thanks very much for watching. It's been Jim Jubak.